Hey everyone, welcome back to Corporate Decoder, the place where we decode the language of business. Today we're diving into a Form 8K filing from Sun Communities, a real estate company specializing in manufactured home communities and resorts. Get ready because there's a Marina sale that might rock the boat. This report is dated February 27, 2025, meaning it's a snapshot of what's happening with Sun Communities right now. Remember that date because things can change fast in the world of business. Sun Communities is a big player in the real estate world, focusing on manufactured home communities, recreational vehicle resorts, and marinas. They rent out spaces for people to live in their own manufactured homes or RVs. This part is just legal housekeeping, boxes that lawyers like to check off. It tells us which rules and regulations this filing is following, but not super interesting for us. You can find Sun Communities on the New York Stock Exchange under the ticker symbol SWAY. Knowing the ticker symbol is useful if you want to track the company's stock performance. Here's where the interesting stuff starts. This section is all about disclosing information fairly to everyone, no insider secrets here. Sun Communities is releasing an investor presentation, and they are also posting it on their website, www.suninc.com. These presentations are designed to give investors a clear picture of the company's performance and future plans. This is another legal disclaimer saying that the information in this report is being furnished, not filed. It's a subtle difference, but it means the company has less legal liability for it. Forward-looking statements? These are essentially predictions about the future, and they're always accompanied by a warning label. Companies use them to give investors an idea of what they expect, but they also make it clear that things might not go as planned. Watch out for words like forecasts, intend, and expect. These are clues that you're reading a forward-looking statement. The company is reminding us to check out their annual report for a full list of potential risks. It is always smart to read through their annual report to fully understand their business model, but most importantly the risks they face and how they're planning to mitigate them. First on the list is economic conditions, including inflation. Rising prices can impact the cost of everything from materials to labor, which could squeeze Sun Communities' profit margins. Also mentioned are deflation, energy cost, and the real estate industry as a whole. Acquisitions and expansions are important for growth, but they also come with risks. If Sun Communities struggles to manage these projects, it could hurt their bottom line. Here's the big news: Sun Communities is selling off safe harbor marinas. This is a major strategic move, and it could have a significant impact on the company's future. There's always a chance a deal could fall through. If the safe harbor sale doesn't go as planned, it could create uncertainty and affect the company's stock price. Selling a business can also affect relationships with customers, suppliers, and employees. Sun Communities needs to manage these relationships carefully to ensure a smooth transition. The company expects to benefit from the sale of safe harbor marinas, but there's no guarantee they'll see those benefits. Maybe they won't see the amount they were hoping for, but they are still moving forward with it. Liquidity is all about having enough cash on hand to pay the bills. If Sun Communities runs into cash flow problems, it could be a sign of trouble. Since Sun Communities operates in multiple countries, they're exposed to currency risk. Fluctuations in exchange rates could impact their profits. If they can't keep their rental rates high enough, or if their occupancy rates drop, their revenue will suffer. This sounds technical, but it's important. If there are problems with their internal controls, it could lead to errors in their financial statements. Impairment losses are write-downs in the value of assets. They can be a sign that a company overpaid for an acquisition or that its business is struggling. Rising interest rates and operating costs can eat into a company's profits. Because Sun Communities owns properties in areas prone to natural disasters, they're exposed to potential losses from these events. The stock market can be unpredictable. Changes in market sentiment could impact Sun Communities' stock price. Real estate regulations can be complex and vary from place to place. Changes in these laws could affect Sun Communities' ability to develop and operate its properties. If people can't get loans to buy manufactured homes or boats, it could hurt Sun Communities' sales. This part lists the documents that are attached to the report, including the investor presentation we talked about earlier. Here we find mentioned Exhibit 99.1, which is the investor presentation document. This is not attached in this 8K report, but it might be found in the investor relations section of the website. Now, let's zoom out and look at Sun Communities more broadly. The sale of safe harbor marinas is a bold move, and it suggests the company is focusing on its core business of manufactured home communities and RV resorts. This could be a good thing if they can reinvest the proceeds wisely. One risk to keep an eye on is rising interest rates. This could make it more expensive for people to buy homes and RVs, which could hurt Sun Communities' occupancy rates. Also, natural disasters are always a concern, especially in coastal areas. Overall, Sun Communities seems to be in a solid position, but they need to execute their strategy well and manage those risks. A reasonable target price range would depend on factors like interest rates, economic growth, and the company's ability to generate cash flow. Thanks for watching. If you found this video helpful, please like, subscribe, and leave a comment below. What do you think about Sun Communities' decision to sell safe harbor marinas? Let me know in the comments.